Good morning, and thank you very much for attending our webinar today on the VAT changes in the construction sector. I know that we have approximately 20 people currently signed into the webinar. I would suggest that as part of the beginning of this webinar is just an introduction that we get underway. My name is Alistair Wilson. I'm one of the tax partners here at MHA Tait. The slides today are being controlled by Sam in our marketing team, so whenever I ask, Sam will move the slides forward. But just for the purposes of today, as a bit of housekeeping, there will be a Q&A session at the end of the webinar. Just in terms of the questions that we tend to get on webinars, some of them are generic and some of them we will be able to answer on the day. Some of them can be quite fact specific. The ones that are fact specific, we would be likely to circle back to the individual who has asked the question. We think that, first of all, that enables us to give a more specific answer, but also it means that if there's anything that is, I suppose, commercially confidential, etc., that is kept outside the public arena. But please do feel free to use the Q&A function, the chat function, which is the little speech bubble, little speech icon in the webinar. If you do have any questions, we will make sure that all questions are followed up in some format. So please do feel free to use that. Sam, if we can move on to the next slide. So just in terms of the purpose of this webinar, the VAT and the changes in the construction sector that are coming in and what is known as a domestic reverse charge, it comes into force from the 1st of March. So we are realistically 6 weeks away from that coming into force. And for businesses in our region, in the construction sector, and that can be wider than people anticipate, and we'll come on to that. But in terms of the construction sector, that is something that is scheduled to come into force on the 1st of March 2021. In terms of where the history is with this particular change, it was something that was supposed to come into force in October 2019. It was delayed because the government felt that businesses hadn't got themselves ready for it. It was then scheduled to then come in, I suppose, between October 2019 and where we are today. But again, the pandemic had meant that that particular later implementation was put back to where we are today, which is going to come into force from the 1st of March 2021. In terms of, is it going to be delayed again? Well, the construction sector, there has been some noise about people asking, can it be delayed further or potentially even scrapped? Our view on this is that it is unlikely to be delayed further. It's unlikely to be scrapped. This is ultimately something that is tackling what is seen as a loophole. It is seen as a gap in terms of the tax compliance and how collection of VAT can be optimised. Because this is quite an easy win for HMRC, and because it's something where, I suppose, in terms of the UK's public finances, we have clearly got a huge amount of money that now has to be repaid in terms of tackling the pandemic. This is something that we would see on the government's agenda as more likely than not to come into force when scheduled, because there's been a lot of time to prepare. Businesses have known that it's been coming for some years now. In terms of systems, in terms of processes, this is now the second, if not third, iteration of trying to bring it into force, and so businesses have had plenty of time to prepare for this. So today my colleagues Louise Phillips and Hadim Sultan from our VAT team will be running through what businesses should be doing in terms of key actions to take now in readiness for the rules, and they will cover what is needed in terms of ensuring compliance with the construction industry scheme and its interaction with the domestic reverse charge. So with that introduction, I will now hand over to Louise, and Louise will take us through the first part of this presentation.
Hello there. Sorry, I just had a slight delay on my machine. Good morning, everybody. I'm Louise Phillips. I'm a senior VAT consultant here at MHA Tait Walker. This morning, we're going to take you through the key requirements of the domestic reverse charge on construction services, which will come into effect from the 1st of March. We'll recap on why these provisions are being implemented, when they will be implemented, and how the provisions will apply to your businesses. I'll then hand over to my colleague Hadeem, who will take you through more of the practical issues and considerations associated with the changes, as well as some of the key things that have been drafted in HMRC's latest published guidance. Could I have the next slide, please, Sam? So why is the domestic reverse charge being introduced? Way back in the budget in 2017, HMRC announced that they intended to introduce the domestic reverse charge. This was in response to organised criminal attacks in the sector, which involved mis- and trader fraud. It was costing approximately £100 million per year in VAT that was being lost as a result of these attacks. So the fraud is primarily centred on supplies of construction services between construction businesses in the sector. And the reason why they've been targeted is because labour-only suppliers in the sector don't incur a significant amount of VAT on their costs, but they can charge VAT onto their customers and go missing without paying the VAT over to HMRC. So we've got a diagram here which helps to illustrate the problem. So if we start with the customer, they've entered into a contract with the main contractor to provide construction services, for example, the construction of a new head office building. Typically that would be subject to VAT at the standard rate. In order to deliver those services, the main contractor has subcontracted some of the work. That subcontractor has a workforce that they're supplying in. There's no VAT on that supply to the subcontractor. However, because the subcontractor supply to the main contractor, that supply of services is subject to a positive rate of VAT, it should invoice the main contractor plus VAT. The main contractor pays that VAT to the subcontractor, and where fraud has occurred is where that subcontractor has collected the VAT inclusive amount from the main contractor, but it hasn't actually paid the VAT over as output tax on its VAT return to HMRC. The main contractor would invoice its services to the end customer in the normal way and charge VAT. So that's where the fraud is occurring. Now, the way in which the domestic reverse charge works is that rather than that subcontractor having to charge VAT on its services to the main contractor, it instead requires the main contractor to treat that supply as though it had received it and made it itself. So it is required to account for the VAT due on the subcontractor's supply. This is an approach that HMRC have implemented elsewhere to try to seek to mitigate mis- and trader fraud that has occurred in other sectors, such as trade involving gold, mobile phones, computer chips, emissions allowances. We'll come on to talk in more detail with regards to how the reverse charge operates and the scope of how it will apply in the sector. Could I have the next slide, please, Sam? So when will the new legislation start to apply? As Alistair mentioned, we've had a long lead-in time ahead of the anti-fraud measures coming into place. This has been to allow businesses to help to prepare for the potential cash flow impact that the change is going to have on the business, and also to really understand what the administrative impacts will be for them. The implementation has already been delayed twice. It was originally planned for the 1st of October 2019, but then at the 11th hour, this was delayed due to the industry's response and concerns that businesses just weren't ready to implement the changes. As you all know, last year we saw the pandemic hit, and in June, HMRC said, look, the construction sector has been heavily hit by the pandemic, and to try to help businesses, they announced a further delay of 5 months to the 1st of March 2021, so that businesses had time to prepare and they could, fully assess what impact the pandemic had on them and allow them to implement any system changes that were needed. As part of that announcement, HMRC issued a business brief. That business brief announced the change, the delay, but it also announced some additional legislative changes which are coming into force when the rules come into play. And Hadeem will come on to talk about some of those requirements later on. As Alistair mentioned, because of the continued impact of the pandemic, combined with lockdown restrictions and the impact that businesses are currently seeing as a result of the end of the Brexit transition period and the difficulty of getting materials from the EU, there has been some press coverage in recent days whereby trade bodies in the sector are seeking to push for the introduction of the rules to be scrapped or pushed back further so that the sector can try to recover from the impact of the pandemic. We know that a government spokesperson has said that they are committed to implementing the reverse charge from the 1st of March 2021. So I think it really is key, that to the extent that businesses haven't already prepared for the change, that they do take steps now, because we've got 6 weeks before they are expected to come into force. I think it's important to note that there will be no transitional period and there is no threshold that will apply to where the domestic reverse charge should be applied to services. With that in mind, where you are supplying services and you have a tax point which arises before the 1st of March, the current rules should apply to those services. Where you supply services after the 1st of March 2021, they will be subject to the domestic reverse charge, of course, where they are subject to the certain criteria being met, which we'll come on to. HMRC have indicated that they will apply a light touch for the first 6 months of the rules being in force, particularly where businesses can demonstrate that they're trying to comply with the new regulations and errors recur as a result of them, trying to do their best and trying to meet the rules. Could I have the next slide, please, Sam? So how will it work? If we look at the example that we talked through earlier, with effect from the 1st of March, instead of the subcontractor having to charge VAT on its services to the main contractor will instead be required to account for the VAT due on its VAT return. So the main contractor will in effect not receive any VAT charge on the invoice that it receives from the subcontractor, but it will have to account for VAT as though it made the supply to itself and as if it had purchased the supply. So they should effectively net each other off where the main contractor is a fully taxable business. Where that main contractor is making its supply to a final customer or an end user, it would treat its supply of services in the normal way and they would continue to carry a VAT charge. Could I have the next slide, please, Sam? So if we look at what that means in terms of your VAT return reporting requirements, take an example of a supply of services worth £1,000, which is subject to VAT at the standard rate. Currently, a subcontractor providing those services would declare output tax of £200 in box 1 of its VAT return. It would then also account for the net value of that supply of £1,000 in box 6. As a result of just declaring the output tax due on the supply of £200, that would filter through to box 3 of the VAT return and also to box 5, which is the total amount due to HMRC. So here we can see that the total liability for the subcontractor, if it was only making that supply of construction services worth £1,000, would be £200 VAT due to HMRC. On the other hand of the side of the transaction, the contractor receiving those services, they would be able to recover that VAT that they've incurred on the purchase invoice in full in box 4. So here you can see them making an entry of the £200 VAT that's recoverable as input tax in box 4, and they declare the net value of their purchase in box 7. So you can see that overall the subcontractor is declaring output tax of £200, but that has been recovered by the contractor when it submits its VAT return. Now, looking at that position post 1st of March, all that the subcontractor would be required to report if the services it was supplying fell within the scope of the domestic reverse charge is the net value of the supply it is making. So it would declare that net value of £1,000 in box 6 of its VAT return. The main contractor would then have additional entries required on its VAT return. So it would have to account for the VAT due on the supply made by the subcontractor, and there we can see it adding the £200 output tax due on that supply in box 1 of its VAT return. That filters down to give you a total VAT due in box 3 of £200. At the same time, it has to declare the purchase that it has made from the subcontractor in its VAT return. So it can recover the £200 input tax in box 4 of its VAT return. You can therefore see that box 3 less box 4 means that in box 5 there is no VAT payable to HMRC. They net each other off. In box 7 of the VAT return for the main contractor, it would declare the net value of the purchase. Can I have the next slide, please, Sam? Actually, please forgive me, could you go back to the previous slide? I think what's important to note here is just that because there's a fundamental change in the way in which that VAT has to be reported on the contractor's VAT return, it's important to make sure that your accounting system is geared up to make those entries. Now, the reverse charge is a common area for many businesses, and most of your accounting software providers will be used to the terminology and should be able to point you in the right direction of the codes that need to be used to ensure that the correct amounts of VAT hit the correct box on your VAT return. I think another key thing to note is these changes are coming in with effect from the 1st of March. They coincide with the Making Tax digital links requirement, which will apply to VAT return periods starting on or after the 1st of April 2021. So when you are preparing for the changes that are required to your accounting system, it's also important to bear in mind how that links in with the digital links requirement for MTD. Could I have the next slide, please, Sam? So just moving on to understand what is the scope of the domestic reverse charge and what it will apply to. Obviously, in the construction industry, we see an array of supplies being made at different rates of VAT, the 0 rate, the standard rate and the reduced rate. But the domestic reverse charge will only apply where the supply is subject to a positive rate of VAT. So that's at 20% or the reduced rate of 5%. It will also only apply where the payments made have to be reported under the construction industry scheme. So that's construction work to permanent or temporary buildings or structures and civil engineering works. Included on the slide there are a few examples of the type of services that we would expect to be caught by the DRC. But at this point, I think it's important that we just take a pause and understand a bit more about what is caught by the CIS. And within that in mind, I'm going to hand you over to Alistair to talk about that in more detail.
Thank you, Louise. Sam, if we can move on to the next slide. I think it's worth just running through very quickly in terms of the key points that we've covered so far. In terms of the domestic reverse charge, if you're VAT registered, you're supplying building and construction industry services, your customers registered for VAT and the payment for supply is reported within the construction industry scheme, and the services you are supplying are standard or reduced rated, then that's the key criteria in terms of when the domestic reverse charge is going to apply. So that then leads on to, so the question about the payment for the supply is being reported within the construction industry scheme. How are you going to check that? How are you going to work out whether or not it is correct for the payment to be reported within the construction industry scheme? So in terms of the CIS has been around for a long time. Again, it's a mechanism which ensures compliance, and it's typically around payments being made by main contractors to subcontractors. The main contractor must deduct money from payments to subcontractors for building services at either 20%, 30%, or potentially 0%, and pay that over to HMRC. And there must be monthly returns submitted to HMRC by the main contractor. The key thing with this is it's the main contractor or the contractor who has to be registered. And so it's the contractor where you're able to check whether or not they are CIS registered. So in terms of the steps that you should be going through with this as a process, assuming that you've checked that the customer has a valid VAT number, and that's something you can do on HMRC's website, and assuming that you have identified that they might be covered by CIS, so your contractor may be covered by CIS, what do you then do about checking that? Well, actually, HMRC have got a CIS registration system that you can use to check, is somebody registered? Now, you will need information from the customer to be able to do that. And so you would need, for example, the business name, the unique taxpayer reference, etc., to check HMRC's construction industry scheme online service to see whether or not they are the customer that you're working for is registered for CIS. However, one other thing to be mindful of, there are some businesses who may not appear to be involved in construction where they can be deemed contractors. So again, CIS would apply. Deemed contractors are typically organisations who would buy more than £1 million a year of construction services within their day-to-day trade. And so that's typically organisations like housing associations, public bodies, local authorities, NHS trusts, but can be private organisations as well, where they don't look like they would be classified as being involved in construction as a contractor, but because of the level of services that they buy, they are what are known as deemed contractors. So as a step, what should you be doing? Well, you should be using HMRC's construction industry scheme online service to check to see whether or not CIS applies to this particular service or the construction services that you are supplying to that end contractor. So CIS, it is something that it is possible to check. However, HMRC do say one last thing in terms of checking under CIS. Ultimately, you may find that some bodies aren't on the HMRC CIS online system. What you should also do is actually ask the person that you're providing the service to, is the service going to be covered by CIS? Because if it is, then again, you should be bringing it into the scope of your considerations for the domestic reverse charge. And with that, I'm going to pass back to Hadim.
Hi, thanks, Alistair. Can I have the next slide, please, Sam? So I'm Hadim Sultan and I lead the VAT and indirect tax team here at MHA Tait Walker. So what I'm going to cover now is some of these situations where the domestic reverse charge doesn't apply. And then I'm going to go through some of the practical implications of implementing the reverse charge. It's obviously important to note that this is kind of the third start of the domestic reverse charge. So hopefully a lot of this will be familiar. HMRC has made some slight adjustments to the legislation last year, so I'll cover those off. They predominantly relate around notification. HMRC also last year issued some new technical guidance. Now that technical guidance is helpful, but quite typical with HMRC guidance, it kind of doesn't cover some of the more complex scenarios. And in some areas, HMRC have probably overstretched what the legislation is intended to do and provide some concessionary treatment. So I'll cover that off as well. But the starting point is, when does the domestic reverse charge not apply? So as Alistair's just mentioned and Louise has mentioned, it doesn't apply where your customer is not VAT registered. So the whole point of the reverse charge is to shift that liability. If your customer is not VAT registered, they don't have a mechanism to apply the reverse charge. It also doesn't apply where the supply is zero rated. There is in fact no VAT at stake there, so there's no VAT that can be stolen because no VAT was charged. It also doesn't apply where the payments are accepted from reporting under CIS. There are a specific set of supplies that are specifically excluded in the legislation, and I'll cover those in a bit more detail. And where supplies are included within the CIS, there are some exceptions for supplies made to end users. Next slide, please, Sam. So what supplies are specifically excluded from the reverse charge? So within the legislation, there's a list of supplies. These are supplies where you're only kind of supplying these things. It's a single supply of these. So some of the big ones are professional work of architects, surveyors or consultants. So if your role is entirely providing consultancy services, then you wouldn't be caught by the domestic reverse charge. It would only be caught if you supplying that as part of a wider supply of construction services, and the construction services were the predominant supply. There's some other examples in there, things like drilling for oil, extraction of minerals, installation of seating, blind, shutters, CCTV. We'll send you obviously a copy of the slides so you can have a look at this list. Other things that aren't included in there are if their construction works are in relation to artistic works, and also around if you're installing advertising and signage. Next slide, please, Sam. So if your services are within the construction industry stream and they're not excluded, they'll also be accepted from the domestic reverse charge if you're supplying those to an end user or somebody who's deemed to be an end user, known as an intermediary supplier. So in terms of an end user, this is somebody who doesn't onward supply those construction services. They consume those construction services themselves. So typically, if you're supplying building works to a homeowner, the homeowner is not going to be selling your construction services on. They'll be an end user. Same with the house builder as well. You'll be supplying construction services to them, but what they'll be supplying is a completed house. So it may not apply in that instance. Next slide, please. There are also deemed supply end users, and they're intermediary suppliers. So this is somebody who who onward supplies your service, but doesn't make any material alterations or processing of that supply. And it only applies where they have a relationship with the intermediary supplier. So they're either connected with that intermediary supplier. So if construction services are provided within a VAT group, so you might have a specific design and build company within your VAT group. If you supply to the end user and you're an intermediary supplier, your supply is not caught by the domestic reverse charge. Also, if you're within the same corporate group, so you're a corporate group under the definition under section 116 of the Companies Act, your supply to that and your supply there wouldn't be caught by the domestic reverse charge. It also wouldn't be caught if the two parties have a relevant interest in land. So this would be, for instance, a landlord supplying to a tenant. Now, the reason this is in place is because with missing trader fraud, it tended to be, in HMRC's perspective, builders that were turning up on site once in a while. The people you didn't know fully. If you're in a corporate group or a VAT group, you're understood to have a better knowledge of kind of who you're dealing with, and there's obviously less likely for that person to disappear. There's all part of the new kind of legislation that came in. There's now a requirement if you want to claim end user or intermediary supplier status, then you must give a written notification to the supplier. It can be done by email, it can be done in a letter, and I'll come on to the wording for that, the specific wording HMRC suggests. You could also now include it in a contract. So if you sign up to a contract and the customer knows they're signing up to that contract with that conditioning, that'll also qualify. And next slide, please, Sam. If you're supplying a construction services with material, so we're talking a supplier that has a mix of materials and labour, then the construction reverse charge will apply to the entire supply. This is where it's a single supply of, say, a built wall where you do this construction services and the supply of kind of the bricks and materials. There is a slight easement from HMRC. This is not in the legislation, but if the domestic reverse charge element is less than 5%, then you can apply normal VAT rules to that supply. And HMRC want the customer to give essentially an end user or intermediate supplier notification that the domestic reverse charge isn't going to be applied in that instance. Also within the legislation there is, if you're supplying services subject to the domestic reverse charge on the same site, then the customer and supplier can agree that those services are covered by the domestic reverse charge. And next slide, please. So this slide is just a reminder. So the domestic reverse charge covers supplies where the rate of VAT is positive. So just a reminder that it's important that you determine what the correct liability of your supply. So there are certain supplies that are zero rated. So new build homes, for instance. If, however, you obviously get your liability incorrect, the reverse charge would also have been incorrect. So it's very important to determine the correct liability of your supply. Next slide, please, Sam. So what we have here is just a flow chart, just to kind of run through the kind of steps you need to take to see whether your service is covered by the domestic reverse charge. So the first question is kind of, is the supply you're making covered by the construction industry scheme? Is it a supply that's specifically excluded from the domestic reverse charge legislation? If the answer is no, then the supply is subject to normal VAT rules. You then need to look at the liability of that supply. Is it got a positive rate of VAT? So is it standard rated or reduced rated? If it's not, normal VAT rules will apply. You'll need to confirm if your customer is VAT registered. It only applies where you're supplying to a VAT registered customer. If your customer is not registered, normal rules will apply. You need to check if your customer is CIS registered, and Ulster's gone through the steps to check if your customer is CIS registered. Now the legislation doesn't cover the detail around where your customer should be CIS registered, and they haven't. And again, that's going to be a problem of the legislation and a problem going forwards. So you'll need to check with your customer whether they should also be CIS registered. The next step is, has your customer given you a written notification that they're an end user? Now, previously there was some confusion around how to determine if your customer is an end user. HMRC introduced new parts of the legislation which make it an obligation on the customer to give a notification if they want to claim end user status. If you haven't had that notification, the normal rules will apply. Next slide, please. And I'm just going to cover off some of the practical issues with the domestic reverse charge. So one of the key things with the domestic reverse charge is that the supplier invoicing is going to change. So you're still required to issue a VAT invoice, but this VAT invoice is no longer going to have VAT shown. What you will have to then instead show on that invoice is the amount of VAT that should have been due and will now need to be paid applied by the customer. Or if you can't state the amount of VAT that the customer needs to self-account for, you would then show the rate of VAT that applies instead. You also need to include some narrative that the domestic reverse charge applies. So there's some examples there of some of the wording that you can use. And next slide, please. And this just shows you kind of a set of invoices, how the invoicing will look different. So historically, you would have put 20% VAT and there'd be a VAT amount. Under the domestic reverse charge, you don't state anything as being VAT, and you put obviously the narrative there that the customer needs to self-account for the VAT. All the other requirements of VAT invoicing still need to be met. Next slide, please, Sam. So one of the things HMRC mentioned in the guidance is that if during a contract the status changes, then the customer needs to notify the supplier that the status has changed. The supplier has an option of two different types of treatment, so they can decide whether to apply the new treatment for the entire invoicing period if it happens during an invoicing cycle, or they can apply it from the next invoicing period Next slide, please. There's also some slight transitional relief for businesses that are using authenticated tax receipts or self-billed invoices. So if you've put these into your accounting system before the 1st of March, but the payment is received before the end of May, you can use normal VAT rules. If the payment, however, is received after the 1st of June, then the domestic reverse charge will apply to that. And if it's entered into your accounting system on or after the 1st of March, then the domestic reverse charge will apply. Next slide, please, Sam. So one of the key changes with the legislation is this requirement to have a written notification that you're an end user. Now, there's no specific format required, so it can be in an email, it can be in a letter, or you can put it into contractual terms. If you're going to do a letter notification, HMRC have given some suggested wording. So we've got that on the screen there. Next slide, please, Sam. If your customer gives you end user notification, you need to keep that as part of your business record to show obviously why you've charged VAT in a situation where the domestic reverse charge could have applied. One of the things that's practical steps is obviously changing contractual terms if you want to do that via contracts. If a customer changes between being an end user or an intermediary supplier, there's no need to give a written notification. Next slide, please, Sam. So some of the other practical implications of the domestic reverse charge. So as we've gone through, there'll be invoicing changes. So you need to make sure your invoicing system or how you do your invoicing is amended to put the correct information on the VAT invoices. Also, the domestic reverse charge changes the VAT return box reporting. So you need to check with your accountancy software provider to make sure that you can do that domestic reverse charge. The boxes are slightly different to other reverse charges, so you'll need to obviously check with your IT supplier. You'll also need to do some staff training just to make sure your staff are aware when the reverse charge should apply. Also, in terms of invoicing, so they know how to invoice correctly. You need to make sure your records, you keep all of your written notifications and make sure your record keeping requirements are up to date. So if you're checking CIS registrations, you're checking VAT numbers, you keep a record of those checks. You'll need to obviously make sure you know whether you're making a single supply of construction services, which may include materials, or you're making mixed supplies. So the single versus multiple supply conversations are still relevant here. If you're making mixed supplies, you'll need to obviously make sure that you kind of document why you think the domestic reverse charge doesn't apply because you're applying mixed supplies. One of the things HMRC have covered off in their guidance is where businesses are separating contracts out. So they might give a separate contract for the labour element and a separate contract for the material element. If they supply to the same site, it's HMRC's view that the domestic reverse charge should apply. Businesses need to start looking at amending their contract, so making the onus on your customer to give you that end user notification, just to make sure they give you that on time. Businesses also need to consider whether there is an adverse cash flow position for them. So one of the things is a lot of smaller subcontractors are potentially using the cash that they receive in terms of VAT to fund their business. So they can use that VAT and then pay the VAT over to HMRC when the VAT returns due. Now, businesses won't be able to use that VAT as cash flow anymore. So there's going to be a potential cash flow impact for suppliers. There's a potential, obviously, upside there if you're a customer, because you're no longer forward paying VAT, handing VAT over to somebody and then waiting to get it back from HMRC. Now, one of the things with the reverse charge is the HMRC identified there were problems confirming the status of the customer. So they've obviously introduced this new written notification requirement. Now, in some instances, if you're a customer and you are an end user, you might actually not want to give that written notification because if you've got the IT fixed up, there's a cash flow advantage to you for not handing that money over. So you may actually want to not give that written notification. So you'll need to have a look at kind of the cash flow impact for your business and decide whether you want to actually give that written notification. If you're a supplier and now obviously you're not charging VAT and you're reclaiming VAT on purchases, you'll become a repayment business potentially. And you might want to then consider monthly VAT returns, so you at least get the VAT back on your purchases sooner. It's also worth pointing out that the domestic reverse charge doesn't apply to the flat rate scheme, and also doesn't apply to, you can't use it for transactions under cash accounting. So this is potentially going to have a negative impact for a number of businesses. So you might want to have a look at whether actually it's still beneficial to use those schemes. Now that's a whistle-stop tour kind of the key kind of aspects of the domestic reverse charge. If you've got any specific questions, I mean, the legislation is more detailed than HMRC's guidance suggests. So please do get in touch. And I'll hand over now to Alistair to go through questions.
Thanks, Liam. Thanks, Louise. Sam, in terms of questions, so I don't know whether you've been able to identify, are there any generic questions that we would be able to cover at this stage?
There's nothing that's come in, Alistair,
Okay.
at this point. I know you did have a few that came in when people were registering, and I know that you're going back to people on those. So there's no further questions come in.
Okay. Well, if no further questions have come in, I would say yes. So anybody who has submitted a question prior to the event, we will come back to you directly. We've obviously got your contact details, and we will make sure that those questions are answered one-to-one for you. But other than that, I would say thank you all very much for attending today. In terms of our contact details, obviously our contact details are in the slides. The slides will be circulated to anybody who has signed up to watch the webinar today. This event has also been recorded, so a recording of the webinar will also be made available. And with that, I would say thank you very much to our speakers today, and I hope you enjoy the rest of your day. Thank you.